Okay, so once again, welcome to the money management webinar. That's the first webinar we will have, and there is a reason for that. The reason is that I want you to understand several ways to manage the account. Okay, manage each account, and each trader should choose what to do per his account. And I will explain about every of them, of course. I will give examples. Okay, if you would like to have my Excel files, just examples, not calculation, just examples, you will see in a minute. Then just email me and I will send it to you. So first of all, friends, why this is so important? Just want to make sure I am recording. Yes, I am. By the way, you cannot see each other questions. Okay. When there will be a question, and please do not ask until I give okay. Okay. I will stop after each topic, and will give you the time to ask. So please, sorry for the cough. So please don't write whenever you want. Just confused. And well, I will of course, once again, I will say the question and answer and reply. Hello everyone. All right, friends. So let's begin. Why this is so important to know how exactly to manage your account, and why the most important thing is each trader can actually know what is better for him. I know many kind of traders, believe me, and I know many kind of traders from the specific examples I will give you. I have three main money management methods. I will show you. There are more, and I know people that trade each of them. I personally trade two of them, and I will explain. About Mikael asks, is there a way to download the webinars? No, there is not, friends. You can watch them live on your media zone. Each webinar is uploaded to the media zone. Okay, so you can see there everything you want. Daily reviews, weekly reviews, live trading room webinars, and all you wish. So let's begin, friends, with the first important thing, and let me just bring it here. Okay, this is actually Nicholas Meketas. Friends, please do not write. Okay, do not write only when I give okay. Okay, it just confused me on the second screen, and I stop whatever I say. Please do not interrupt the fluence of the webinar. Okay. I will give time to ask all, promise. Okay, friends, this is example of the classical trading. This is example of the classical trading. There are clear advantages with that, and there are clear disadvantages with that, and I will explain all. First of all, what is that? This is how I call it the percent growth account. Okay, and this is the best example to show how account can grow each and every month, slowly but steady, sometimes with losses, of course. Okay, but steady, month after month, almost without the losses, and and bring us to the goal we set for ourselves. The advantage, it is steady and easy, and we never risk all our money. Never. We actually risk some percent per trade. 1%, 2%, but not more. Never more. Okay? Never risk more than 2% per each separate trade. Never. And this is example of a balance, okay, a capital of beginning, okay. Let's say a standard account, $5,000, okay. For some it could sound too much. For some it could sound, are you kidding? I start with 30,000. Okay, I don't want to get in the pocket for everyone. Everyone should go with his possibilities. I take the average, okay, and everyone should understand that as lower the account, the smaller the growth is, and the bigger risk is, because when we have small account, the main problem is, okay, so I have 1,000, for example, okay, I made it grow to 1,000 to 1,100, okay, I made it grow to 1,100, then I made it grow to 1,200, okay, but then after 2 months or 3 months working, I understand that it is too slowly. I want to do it quicker, faster, then I take more risk, and of course, then I begin to lose. That's how life and trading works. And you should understand it, friends. The lower the account, the difficult to make bigger profits. The bigger the account, easier to make profits. Now I took, for example, 5K just for beginning. Okay, first month, that's the balance. That's the monthly gain after profit trade, lose trade, profit trade, lose trade, profit trade, lose trade. Okay, my gain always per each month is between 5 to 10%. Do I reach it every month? No. I admit, no. Do I reach it most of the months? Yes. Okay, and here you can see the clear example of the growth of the account. Okay, it grows by 5% to 5,000 and 2,500, right? 250. Then that's the balance for beginning of the second month. Then I reached my goal, 10%. Beautiful, it reached this equity. I continued the third month. Then I lost. I finished with the month. I finished the end of the month with a loss. What does it mean? Am I a bad trader? Does my strategy stop working? How come? I profit 2 months in a row. All my friends profited. There are so many emails about robots that profited in this month. So many commercials, right? Advertising of, look how much we profited during this month and only me lost? How come? And here comes the psychology, friends. Here comes the psychology. Here, in this situation, after a loss, well, we all are heroes, right? After a profit. We all, oh, I am a good trader, that's a good service, that's a good EA, that's a good, I don't know what, the strategy indicator, right? We all heroes. But the truth is that we are actually being tested, okay? And by ourselves and by trading when we lose actually, okay? Why? Because then the real psychology begins to work. For this, that after 1 month of loss or 2 months of losses, begin to lose their patience and try to revenge the market, try to take bigger accounts, try to trade intraday if they are only longer term trades, okay? For this, who try to do it, I guarantee the end of the story. Why can I guarantee it? I've been there. I've erased my several accounts. I've erased my parents' account, and I did it to my account as well. I admit, I don't have any problem to admit it. I lost a lot of money. Well, once again, it's individual. Someone can say, I lost it in 1 day. Someone can say, oh my God. And when I was younger, I'm still young, right? But when I was younger, it was a bad situation, believe me. I was a student without money. Okay? So that's why I allow myself to stay here today, to be here today, and say you the truth. I know you know the truth. Maybe you first time heard it, maybe it's 1 million time you heard it. But that's the truth, friends. For this who lose the passions and try to revenge the market, that's the end. That's the end. Someone told me a joke. One soldier of the U.S. Army told me a joke when I was in U.S. and he said, "When you, I'm sorry for the words, right? But when you try to pee on the army, right, you make it wet. But when the army pee on you, right, you are lost." Correct? That's how. That's exactly with the market, friends. When you try to do it, it's fine. But when the market does it, you lost, and you lost all your money. That's why you must accept losses. All right? You must accept it. I know it's difficult. I know it's easy to say, but hard to do. But here, once again, is exactly when we are being tested as traders. Okay? So, I accept the loss, my equity, my balance went down. Then, standard small percent profit, and I earn, this is my equity. Then 2 good months, and I grow up. 1 loss again, 3 good months again. Well, average months after that. And at the end of the first year, the 12 months, I have 900, well, 9,900, almost $10,000. After a whole year, is that a lot? No. But how can anyone expect to beat a lot when we started just with 5K? It is almost 100% profit. Whoever can give you more. And that happens, once again, friends, once you risk exact percent, the same percent per each trade. And what do I mean by that? Please listen carefully. My capital of beginning is $5,000, right? Now I prepare a separate, okay, I prepare a separate table here, okay? Now watch this, friends. Let me just make borders. All right. Now pay attention. Okay, this is plus pips. This, oops, sorry. Okay, this is gain in pips. This is lose in pips. And that's gain, lose percent. Okay? I want to show you something very interesting. Some of you already saw that. Some of you will see it for the first time. Let's say I have 5K. The only thing, I will risk 2% per trade. The only thing that will change is the lot size. What do I mean? If I risk 2%, that means I risk $100 per trade. If my stop loss is 200 pips and my money risk is 100 pips, that means I should go for a trade where each pips will be $0.50, right? Simple math. If my risk per money is $100 and my risk per pips, the stop loss, $200, right? I have to make a trade when each pip equal $0.5, means 0.05 lot size. Let's say I lost this trade. Sorry, I lost $200 and minus 2%. 200 pips, sorry. Okay, I lost $100. Then I opened once the same trade and I lost once again, and I lose 2% once again. I am minus 400 pips on the account, but only 2%, 4%, right? 2% twice. Only 4% from my balance. Then I earn, okay? Then I have a trade with stop loss of 50 pips, okay? 50 pips. And that means that each pip should be $2, right? 100 pip, $100 is my risk per money. 50 pips is my risk per pips, the stop loss. I have to make a trade where each pips is $2. Then I open 0.2. Then I gain 50 pips and I gain 2%. Okay? For example, it won't be, Nicola said, oh, no, I continue with the beginning capital. I take it from the very beginning, okay? From the very beginning. The calculation is always from the beginning. When I grow up, yes, the total balance, correct. The beginning balance, actually, okay? And when I grow the amount, sorry. Okay? Then I am 50 pips earning and 2%. Then, for example, I have a trade 20 pips stop loss and 20 pips profit. Then I have to make $5 per trade, and it's 0.5 lot size, $5 per pip. I earn 20 pips and another 2%. Let's say the same trade for and the next one and the next one. Okay? Now pay attention. I am minus 400 pips from the beginning. I am plus 110 pips here. I am minus 290 pips total. But I am 4% on the balance with minus 290 pips. Sound possible? Sound impossible, right? It sounds impossible, but here is the simple math. Here is how it's done when you risk the same amount of money. That's how it is done, friends. You can earn money when you lose pips. I want you to remember that. I want you to understand it. Because many traders I know have problems with this issue. How can I profit money when I lose in pips? Or how many pips you make per month, per week, per year, per everything? Forget about the pips if you work with this kind of money management. Money management when you risk per pip, per percent. Okay? When you risk per percent. You can lose pips. You can lose one big long term 500 pips and earn only one small trade with 50 pips. But you will still be profitable on money because the only thing is changed is the lot size. Now here you can find the continuing for another year with some losses during the year, okay? And pay attention that after 2 years with losses on the way, with small months with profits on the way, I have from 5K, I have 20K. Now here is the psychology again. Is that enough? Should I wait 2 years, 24 months of my life to get from 5K only 20K? There are so many EAs that promise more. There are so many advertising that promise make $1 million with $500. Friends, wake up. That's the reality. Okay? It's good to sell. I'm sorry for that. It's good to sell for, I'm sorry for the word, bullshit. But wake up. Please. Understand that you are now in the real world. If you want to become a trader, you should understand. Momo said no sound. Friend, do you hear me? Okay. All right. Thank you. Okay, friends, this is the reality. Please understand. I respect everyone that admit I don't want to be a trader. I want a robot to manage for me all. I respect every opinions. I respect everything. But if you decided to become a trader, you must understand it's a process. Right? It's like buying a house. When you go to buy a house, you can't have all the money for a house, right? You can't have all the money for a house in 1 year. You save your money, you save your money, you save your money until you have some respectful amount. And then, right? It's a process. It's 2, 3, 4, 10, 12, 20 years, everyone individual, right? You save the money. The same is here. You want to trade big numbers, but you now only have small amount. Understand it is a process. It could take 2, 3, 4, 5, 10 years until your account will be big enough. Until your account will be big enough. That's how it works. And this is the way I believe and I manage my medium account. I have 3. I have small, medium with 10K, and I have 1 big account. Well, it's big enough. It's not big, it's big enough. It's 50K. On 50K, I trade only with my bank because the smallest spread they provide. Right? That's all, friends. On the big account, I trade differently. On mid account, I trade this way. On big account, I will show you how I trade. Any questions about only what I said so far? Nigel says, if you double your account in a year, can you carry on with 2% with half and save for? No. No, you don't need, Nigel. Once again, I repeat the question. If you double your account in a year, can you not carry on with 2% risk with half and save 4% with new money? You don't have to. You don't have to. You can always increase and reduce risks. but you go steady with the way you decided, and that's how your account will grow. Some year you will double your money. Some year you will not double money, but finish with, well, 40% or 20%. Still, no one can give you better. Personal guarantee. Lucian asks, how did you calculate the lot size? Sorry. The lot size depends on the stop loss. For example, once again, if I have 5K in the amount and I risk 2%, that's $100 risk, right? That's $100 risks. Now I see my stop loss. Okay, I make the analyze and I see my stop loss is 100 pips as well. Okay, I make the math. $100 should be equal 100 pips. When does that happen? Sorry, just a second. When does that happen? Only when each pips equal $1. Right? On what lot size each pips equal $1? 0.1 lot size, standard lot size. Okay, that's how I calculate the lot size. You can Google for calculator and it will help you. You will find many free stuff and Google about calculator for pips. Okay. Ben asks, we just have to this. Yeah. The simple as it sounds, we just have to get the discipline. Friends, discipline is all about yourself. There are no magics for discipline. Not me, not anyone else. Not robots even, because I saw so many traders that even with robots lost money because they interrupted. They closed trades that actually being involved in trading of the robots and still lost. I'm not talking about the bad robots, I'm talking about the nice. Okay. Jenny asks, can you go through stop loss, stop loss size? Jenny, I'm so sorry, I didn't understand what you write. You have so many J's there, I don't know what that means. Philip asks, is the 2% per trade based on what is... No, it's a good question, Philip. It's what Nicholas, I think, asked before. I start the calculation from here. When the account grows at the end of the month, I start a new calculation. Only at the end of the month. You can, of course, go after each trade, but this way it's difficult to calculate everything new. I prefer each month, but it's possible to do it after each trade. I always calculate from the beginning of the capital. Even if it goes down, my 2% is from the very beginning of the capital. Elizabeth asks, how do we calculate the risk when trade? There is a great calculator, free calculator on Google, friends. By the way, very soon, we will release you an indicator and an EA with money management. Okay? Say no more. That's a little surprise. So I shut up and just please wait a little more. You will get it very soon. Momo, that's exactly the answer I gave before. Okay, Jenny, okay. If you understand the answer, that's most important. Yes, Peter asks, have you ever risked more than 2% when you were sure your trade is going your way? Yes, I did, Peter. Yes, I tried. And I can't say it worked fine. Sometimes it did, and my profits were bigger, but then I was sure I am a good trader, even better than I was, and I lost. Okay. Nigel asks, can you scale into a trade? Wow, what do you mean, Nigel? Sorry. How much per capital? What does it mean, Momo? You choose. Vegans asks, is it better to have 4 or 5? Yes, I think it's a good question. Is it better to have 4 or 5,000 account than one 20,000 account? I think yes. I think yes. It's easier to trade this way, but that's my opinion. Everyone should go with whatever feels comfortable and convenient for him. Dave asked, did you say you use different method for a small? Yeah. If you understand correctly, Dave, I use different for a longer account, for my biggest account. I will explain in a minute. Yes, Philip, and it's also, Philip asks, do you ever pyramid when the trade is going exceptionally well? You will see, okay, you will see examples. Andrew asks, if my account is in euros, not dollars, well, you're the same, just calculate for the euro. It's the same, it does not matter. what currency you calculated. Okay, cool. Friends, let's move on. Okay, I close this one. And let's go for another one, the Martingale. The one that so many people hate. I personally love. I don't use it, but I did use it for 5-6 months, I think. During my life, it worked fine, but then I stopped because I decided to trade with different money management. A lot of advantages, a lot of disadvantages trading Martingale. Okay? Igor says, I think it's also important to feel comfortable with the amount you, of course. That's the very beginning, Igor. You must feel comfortable with the amount you risk, even if it's less 2%. If you feel anxious by losing $100, don't risk $100. Risk $20 or $10. You must feel comfortable with loss. Okay? Martingale, what does it mean? That's the capital of the beginning. That's the balance. Okay? I set a strategy. It does not matter what strategy, but it's important that the stop loss is equal to take profit for calculation. I set, for example, 40-40. I started with the balance 5K, and my first trade is without leverage. 1-to-1. 5,000 amount. Okay? 5,000 amount. If it's euro dollar, then 5,000 euro. If it's British pound dollar, 5 British pound. Okay? But this is the exact 1-to-1 ratio between the balance and the lot size without any leverage. Okay? For example, I lost $20. Why? I lost 40 pips multiply 0.05, which is which is $0.50 per pip. Okay? 40 pip multiply on $0.50 per pip is minus $20. That's the equity and the next balance. Okay? I duplicate the next lot size. I lost equity, balance, duplicate again. I duplicate only when I lose. When I profit, I begin from the very beginning. Then minus 80, bam, 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 bam. I bring here, I'm here now, and finally I got 40 pips profit, right? With $16 per pip. And my account grows to 50-20. Alright? Then I begin from the very beginning because I already profit 0.05, I profit 20, add to equity. Then I lost and then profit again 40. Then, oops, sorry, it's 540. My mistake. Okay? No, it's not months. Sorry. That's a good question, Nicholas. It's trade. It's not months. It could be 9 trades per day. Sorry. Sorry. Oh yes, it's 560, right? This plus 40, 560. That's trade. Sorry. Thank you, Nicholas. Okay. That's it could be done per day. Okay, but it could be also done per 2 days or per week. You decide. There are many advantages and disadvantages. Why did I start without leverage? Just to make it feel more comfortable. Because if I was started, let me just erase it here. Okay. If I, oops, sorry, just wanted to show you something. If I was started with 0.2, for example, okay, and lost $80, okay, for 9, then 0.4 and lost 160, right? Right? After 4 or 5 trades, I don't have enough money to hold my positions. After 4 or 5 trades, I don't have enough money to hold my next position. When you start with small leverage, without leverage, you can lose 7 trades in a row and earn the 8th trade, and you still be profitable. And you still be profitable. Now, now let me just answer questions. John said the odds must be about 1,000,000 to 1 against blowing your account if you... Correct, I agree with you, but that's for previous, right? Previous method. I agree with you. Nigel said, what I mean by scale into a trade is, can you move stop loss to break even or above, then enter? Yeah, of course, Nigel. It was just an example, an explanation of how to trade. Of course, some trade can profit more than 2%. Some can lose 2%, but never more. Okay? You can go and profit 3, 4, 5% with the trend. It's fine. I was talking about monthly gains. Okay? That's what it is. Adrian, is that okay, the answer I gave you before? Adrian asked, why cannot use leverage on Martingale? That was the answer before. Because I want as many possible trades to go against me and still be alive. Okay. Answered. Johanna asks, how do you calculate when more than one trade in a time? You cannot, Johanna. If you use Martingale, you cannot. It's a good question, but you cannot have more than one trade per time. That's why the stop loss and take profit should be small. Okay? So it will actually finish quickly and you can go for the next trade. Is Martingale too risky for the beginners? No. No, but you must accept it. Then you can blow your account. And you must accept it. Then after 4 or 5 trades, the amounts become bigger. And each pips equals more money. And the psychological can be an issue here. Okay? Okay? Well, it's up to everyone, individually, friends. If you feel comfortable with money, go for it. It's amazing money management. I know many hate it, but that's amazing, really. It's amazing. If you begin without leverage, you cannot lose. I have a very good friend, Arnon, and he trades only Martingale with his $20,000 account, and he begins with 0.1. Each month, he puts $1,000 per in his pocket. Each month. And he trades only extreme levels. He looks for pairs that actually made a big move during the day, and then he starts to attack it against. He trades 30-30, not 40-40. 30 stop, 30 profit. And he starts with even negative leverage. And he puts $1,000 each month. It's not a lot, but it's amazing extra income. And I know him for 2 years, and he shares with me his account every month. He does not grow the account anymore. He just takes the $1,000. Once again, everyone should be comfortable with whatever he chooses to manage his account or her account. Okay? You must feel comfortable. If Martingale makes you anxious and nervous, forget about it. It's not for you. But we are so different. Everyone can feel different. Okay? Yeah, I agree with you, Igor. The psychology after 6 loss, it sucks. I admit it sucks. But that's why if you can't accept the risk, don't do it. Okay? Oh, Chris asked amazing question. How come the Martingale system never works for me when I play blackjack? Because blackjack is always against you. The dealer is against you. The statistics is against you with the card. Believe me, it's a true story. I lost $2,000 by Martingale in blackjack as well, Chris, during 2009 while playing in a Caesar Palace in Las Vegas. I tried it there, but blow my account very quickly. That's how. Thomas said, do you think Martingale risky for beginners? Okay, answered. Can we change the stop? Yes, of course, Chan. Oh, no. It's a good question. Can we change stop loss and profit for next trade? No, you can't. That's because of the simple math. That's all. That's why you have to go with a strategy that allows you the same stop profit. What is the probability of success using this method? Well, I've been using it, Philip, for a few months, trading also extreme levels, and I've been doing good. I must admit. I never lost money with Martingale, I admit. But you must go with strategy that you know that will never lose more than 2 or 3 actually trades in a row. Of course, in theory it could, but I mean during the past, never lost. Okay? I did it for a few months. It worked fine, really. It worked very good. I did good money, but I started because I decided to start trading different. And I will explain the last method, you will understand. Joanna, yes, I begin with 1-to-1, even begin lower than 1-to-1, even negative, if you can. All right. I agree with you, Theo. That's why if you trade only, for example, okay, I just want to show you an example, friend. If you take, let's go for 15 minutes, okay, and let's take, well, which pair did a good move? It was Euro Franc, for example, right? During Friday, okay? I use, for example, just set resistances, trend lines, and find the extreme levels. Then, if it goes up, and stopped, for example, attack the first trade. Succeed. Not, go for the next extreme level. Attack then. Failed. At the end, it will work. But only if you have, once again, a clear strategy for that. Okay? Okay, friends, now for the last method, and that would be money management without leverage, or the way I call. Ciao, Katie. Nigel, say, can you not margin every trade by entering new position? Oh, that's the exact example now, Nigel, sorry. Just in a second, friend, I just want to have some water in a second, please. All right. And this is, friends, how I manage my big account. I promised you to show how I manage my biggest account. This is how. There are huge advantages by that and small disadvantage. That's what Nigel asked before. This is my preferred money management when I trade the big account and when I trade the big long-term divergences. Okay? Now, we will have webinars about divergences and I will explain it once again then. Right for now, I want to explain the method. You have a balance. Your first trade will always be with negative leverage. For example, 1 to 1 would be 0.1, right? 0.1, which is also 10,000 currency, right? Each currency. 0.1, this is 10,000 amount of currency, right? Now, negative would be when I use lower than 1 to 1. For example, 0.05. Now, for example, I see critical divergence on weekly and daily chart. Okay, I start to sell, of course, based on the rules, of course. Then I go for 0.05 and it goes against me 200 pips. I don't set stop loss here. Okay, don't set stop loss here. Okay, now I add another, if it goes against me, another same lot size position, Nigel, as you said. Okay, now my balance is 990 because it's 200 pips minus from the previous lot size, which is $0.50 per pip. Okay, now it goes against me. Okay, 200 more, right? And 100 from here. So sorry, it's 960, 939. This is how it goes. Okay, I lost, and it goes once again against me. Now I lose $100 from this position, but 200 more dollars on the previous position. Okay. No, sorry, 100 more. It's 200 more pips, 100 more. Sorry, the calculation was fine. Sorry. That's how. Okay. $100 from each position. It's $200 total. Okay. Now I go against and against and against until the divergence work. Why it is very, very good to trade this way? First of all, watch. I am minus 800 pips. A total, right? Even more because I add positions, and a minus 5% from the balance. Okay? Now, the market, if you know it or you don't know it, always makes circles. The market always moves on circles. You can't find any pair on weekly chart without circles. You just can't. You see? It always moves on circles. Okay? Always. Each pair. Each pair. Okay? Sometimes the circles are very long. It could take 1 year, 2 years. Okay? But at the end, the circles will happen. And you will profit with that. Okay, so when the circle happens, I choose to close all on 142, and that's after close. That's the balance, the profit and loss after the close, and I am 5% balance on this trade after long period, of course. I mean, oh sorry, it's not circle. I mean cycle. Sorry. Thank you, Theo. I mean cycles, not circles. I'm sorry for a mistake on English. Cycles. Thank you. The market always moves in cycles, right? Always. Okay. Beautiful, Nicholas. $500 for a year. It's not a lot. I know. I know. But you can hold more positions on more pairs. On more pairs. And I must admit, With the first method, you earn more money. With this method, I think it is the most comfortable and easy way to trade when your account is big. Because this way you can be calm. I have 50k on my account. I open positions. The first position 0.2. That's all. That's all. And usually during the end of the year, last 3 years, I earn between 25 to 40% every year. I know it's not a lot, but it is so comfortable and so easy, because I know I cannot blow my account, never. When I enter on critical area and weekly and daily divergences, the cycle will happen. I guarantee that. And you can go every pair you want, and you will never find situation the cycle never happened. There is one reason for that. Because on Forex, it is always one currency against other currency. Always. Despite of stocks or commodities, here is one currency against other currency. The governments never let currency gather strength or lose too much. Never. Never happened and never will. I prefer this method for big account. And you should understand the profits are limited here. They are much less than on the previous two. But they are steady, and when your account is big, the profits are big as well. I personally prefer it because I don't have to babysit my trade, never, when I trade this method. I can go once a week to see what happened. And I will never be worried, because I know with small positions I will never blow my account, never. Plus, another last thing, take trades only when you don't pay swap too much. Because if you pay swap during 1 year, it can be too much. Okay? Very important. Now, let's see. Do you fix... No, I edit based on my rules, Adrian, with candle patterns. I can add after 50 pips, I can add after 400 pips. Only when divergences with candlesticks come to the conditions, when the conditions met. Okay? Only then I add a position. It can come after 100 or even after 500. Just when I have candle. Yes, of course, Elizabeth, I will go in a minute, okay, and show the, for example, live trade. So we keep all trades up. Yes, Nigel, I keep all trades without stop loss. If you increase lot size, you begin to go with Martingale. And I want to have many positions, not just euro dollar, sometimes 3 or 4 trades. Then I keep my small lot size. Okay, sorry. Thank you, Nicholas. Nicholas called me lazy trader. Thank you very much for that, sir. Okay. Swap is interest rate. How to avoid swap? If you take a pair like New Zealandian against the yen, okay? For New Zealandian, it's about 4% interest rate. For yen is 0.10. The difference is 3.9. If you buy New Zealandian yen, you earn money from the difference of the swap. If you sell the currency with the biggest interest rate, you pay. So just avoid it. If you don't know where, just Google interest rate on currencies, and you will see, you can find it on FX Street. You can find it there, fxstreet.com. Okay? You will see all the interest rate, and you will see and you will know when you lose, when you profit. Well, that's the answer I gave. For example, Philip, if you take everything with yen, then just long, not short. Okay? No limits, Chan. No limits at all for additional trades. Just go with it. Here is an example, okay? I take euro dollar weekly chart. Okay, let me share with you an example. Okay? I take here, okay, that's weekly chart. Okay? I look for 5 moves. Okay? 1, 2, 3, 4, 5. Okay, sounds good, looks good. The MACD slope is down, stochastic divergence, and I have inverted hammer. I begin to sell. Now, let's see what happened. It goes fine, bam, it goes against me. Okay, it goes against me, but the divergence is still here. Okay, now pay attention for the numbers. I have entered at 141, okay, for example. Now I am around 147 and still without pattern. Bam, I have pattern. I add a position. Okay, I add a position. Divergence here, everything good. Bam, goes against me and I have pattern again. Okay, I add another position. Bam, bam, bam. Okay, I started here. You see, I started here and I went all the way down for all the additional trades to make my profits. Understood? That's an example. By the way, it's a trade I've been in. It's during 2009. I've been in personally. It took time. Yeah, like dollar Canadian, for example. Yeah, of course. Dollar Canadian, okay? Watch this chart. If you add here, okay, the first position with the first divergence, and then you add here, and then you add here, at final, you started here, you will earn all the way this up move, okay? This up move when it comes to the very beginning. Like dollar Canadian, like dollar yen. If you pay attention for the dollar yen, it's the same. Okay? We have had the moves 1, 2, 3, 4, 5. We should start attacking. If it went against, okay, we go against. We add. But at the end, it works. Okay? Phil says, seems pretty inefficient. Well, okay. That's okay, Phil. If you don't feel it's efficient and it can work good for you, you should not try with that. That's fine. Totally fine. I agree with that. Not everyone should go with that. Just if you feel it's logical and it could work well for you. I use it long time now. I knock on the wood with good success. Joanna asks, I should have known this 4 days back, but now. Okay, Joanna. Nigel, okay, you use this method, but with increasing lot size, you are welcome. You are welcome as long as it works for you. I don't, because I love to have a few positions. By the way, true story, I have Canadian franc right now. Okay, I have Canadian franc. Let me just show you where exactly. Okay, I started the Canadian franc here with this divergence of 92. I had the last additional part here, 086. The next pair I'm going to take is the British Pound New Zealandian. It is 1, 2, 3. I will wait for 4 and 5 waves and I will start to attack it. Why? Because on monthly chart there is a divergence. Okay? then British pound New Zealandian for guaranteed will make U-turn during the next months. It will take a while. It will happen. I will meet you here, friends, in next year, and we will discuss about it, and you will say, oh yes, Vlad, we remember that. That's what I hope so. Okay? Now you know what trades I'm going to have. I have CAD franc, I have British pound New Zealandian on my list. Okay? Nigel, is this known instead of the Martingale? I call it, Dave, it's not a Ribakov method, it's an investor method. When I've been in the NYSE last year, they showed me their big accounts. I'm talking about millions, not thousands of dollars, millions. And they do it the same. If they do it, why can't we? Right? Chan, once again, must it be the same lot size for additional trade? I do it the same, but there is a reason for that. Because I want to have few trades, not just one currency pair, but few. Okay? That's why I begin without leverage. Okay? Elizabeth, say, when do you exit the trades? When I have between 3 to 5% growth on my account at specific pair. 3 to 5% growth per each trade of, each pair, okay? Each pair. Nigel said, I also close some early trades where I know. Okay, me not, Nigel. I don't close early. I wait patiently until it happens. Can I please explain again 1, 2, 3, 4, 5 to enter? Yeah. Oh, the method of the wave counting. No, I will not explain it now because I will explain it when I will have divergences webinars. Nicholas says, just check the Aussie franc, please. Is it bearish or bullish? What do you mean, Nicholas? What time frame? Or 4 hours. Let's see, 4 hours neutral. Not here, not here. 50 moving average, 50 RSI hold, support hold, nothing, no idea. No idea. As for now. Philip asks, no stop loss for this strategy? No, no stop loss. Okay. That's okay, Nicholas. We all bullish from previous week live trading room, right? We all bullish then with 20%, and now we are looking for retesting the trend line. That's fine. But as for now, the picture is not clear. The long-term bullish is still here, but as for now, just not clear. Friends, any questions about money management? Of course, there are more methods. For example, very well known, just statistics, okay? Just statistics, such as harmonic trading. What do I mean? You have plus, you have minus, and you have, you have minus, okay? Just show you something, and you have total, okay? For example, plus 100, minus 50, minus 200, minus, let's hear a minus here, minus 50, minus 200, minus 70, plus 170, plus 50, plus 130, for example, okay? And there is a total, which will be sum of, let's see, sum of those, okay? There is also statistical trading, and in statistical trading, when you go with a strategy, then you risk X, but you want to take more than X, okay? You are aiming to take more than X, such as harmonic trading. Okay, what is harmonic trading? Let me show you the harmonic trading, friends. Oh, it's not that. Not that. Let's see here. Okay, where is that? It will be open in a second. Why it's not opening? Here, okay? Right? That's harmonic. And you go only for calculating the pips. Okay? You trade with the same amount, with the same lot size, just counting the pips here. But you use strategy when your profits are bigger than your stop loss. This way you lose 50, you profit 100. You lose 60, you profit 700. 70, sorry, 70. Okay? So, that's how it works. Previous week we have had minus and minus, Euro British Pound, Euro Franc. Now we have Euro Dollar reached target. Today I updated it. We have New Zealandian Yen running, and we have New Zealand Dollar still pending. Okay? And Swiss Yen still running. So it's all about statistics in this case. Okay? It's all about statistics in this case. So it's also well-known method. Okay? Well-known method. And if this is the way you prefer to trade, go with that, friend. You must, the most important thing for me, that you feel comfortable with whatever you do. With whatever you do. And if you feel comfortable with trading the same lot size per each trade, go for it. This is the statistical trading. If you prefer to go with, as I do, with risk percent, okay, with risk per percent, go for it, right? And of course, if you want to go with the investor style, go for it. But you must do whatever you feel comfortable, friends. That's the secret. Go with whatever feels right for you. Not for me, not for everyone, just for you. Because it's your money. You should be okay with that. Okay? Momo says you can see other questions. I know. That's the limits from the GoToWebinar. We increase the capacity, but we are now paying with questions. That's why I repeat questions. Max asks, is this webinar recorded? Of course. Let me just make sure. Yes, you see, it's recording. I just have stopped recording soon. New Zealandian Yen have hit open target. Yes, still open target. Still alive. Was very close to stop loss here. Still alive. Let's see. It's reduced risk anyway. So no worries about that. What do you think about set and for? That's the method I was talking about, Igor. The last method I was talking about. What do you think about set and forget approach instead of babysitting the trade? That's what I talked about. That's what I do with my account. Exactly what I do with my account. Okay? No. Just the big time frames. Because on short you must babysit it. You can't trade the short terms without babysitting it. You must see what's going on with the market. Okay? Oh, Momo, you find that the divergence strategy is difficult for you? It took me more than 3 years, Momo, to understand the divergences, really understand it. Believe me, it's super difficult. Because it's so many things to understand and see and know. It takes time. It takes time, but it happens. If you have patience, it happens. Friends, thanks a lot. I hope you find this money management webinar useful. Why I started with that? Just because I want you to understand the methods and to choose what feels correct for you, because you manage your money. You not manage my money. You manage your money, and you should be okay with that. The next webinar is on Friday, friends, and we will talk about harmonic trading. Thank you very much for all. Thank you for being here. I wish you a fantastic day and good luck with our trades. Thank you. See you tomorrow on the live room. Thank you for that, Phil. Ciao, friends. Goodbye.